It's me again. For any of you that watched the video earlier today, which focused on the Canadian market, I said I would try and do one for the US, and so here we are. So what I'm going to go through is my process for scanning and identifying, and then whittling the list down to a very short list to focus on next week, similar to what I did earlier with the Canadian stocks. Although I use a different tool that has far more information in it, which helps, I think, make better decision making. So the software is called MarketSmith. It's from Investors Business Daily. It may look complicated. I've been using it for about a year and a half, so I'm quite familiar with it now. But I'm still only using it to a fraction of its potential. But I find it incredibly useful. It is great charting. It has fantastic screening and scanning capabilities, and it gives me a lot of fundamental information about the company. So I highly recommend it. So one of the things I start off with is there's a little tab up here called Open Stock Ideas, and I do this on the weekend. So there's a few scans that I look at on the weekend. Some of them are pre-configured by Investors Business Daily. They include their Growth 250, the IBD 50 index, their industry groups, stocks approaching new highs, William O'Neill screen, and a Mark Minervini trend screen. I don't usually look at these too often, maybe once a month or so. There's a different set of screens if the market is in correction. Right now, it's in a confirmed uptrend. So these are what they recommend, the screens. If the market was in correction, which it was for like a long time, you're looking for stocks near pivots, near the relative strength, set a new high, maybe those that are pulled back, and so on. And then I have some of my own screens that I've developed. So I put them in my favorites, and I will look at these. So on any given weekend, here's the screens that I've developed are over here, and I won't go through them all for sure, but I'll go through a number of these and probably end up looking at, in the space of a weekend, probably 1,000 different charts. And then I just want to whittle it down to certainly the top 10 or 12 that I want to focus on for next week. So when you get your eyes trained for it, it can go very quickly. When you're new at it, of course, it might take a little longer. So with my longer term accounts, I'm looking for really solid companies. So I developed a screen that I just simply call Best Prospects. And so if I just open up to see what's in that, just to give you a flavor for here, it's searching the entire MarketSmith database of 9,700 stocks. That's its starting place. But I'm only interested in stocks that are greater than $12. Without belaboring the point, institutions just generally don't buy stocks that are under $10. So that's my sort of price cutoff. I'm looking for fast growth in earnings. So they've got earnings growing greater than 25% in the last quarter. And in the quarter before that, they also went up more than 25%. They have a earnings per share rating of greater than 75. This is sort of a proprietary Investors Business Daily thing, but the higher the better. Its relative strength, we've talked about this before, it's got to be 85 or better. In other words, it's performing better than 85% of all the stocks on the stock exchanges. Accumulated distribution rating, either A or B, just to, what does that mean? To give you a little definition of that. So basically these are, A and B is either there's heavy buying in the stock or moderate buying. So it's just showing that institutions are very active in this stock. Composite rating greater than 85. Again, the higher the number, the better. Industry group relative strength. I want to focus on companies that are in the top performing industry groups. So that, I mean, it's hard to, you got a good stock, that looks good on its own, but it's as a group, that whole sector is like in the bottom 10% of all stocks. It's like pushing a rock uphill. It's really going to be hard to get some traction with that stock. So I'd rather be dealing in a universe of companies where the industry group is really strong. I set a market cap limit of $50 billion. So it's excluding companies that are bigger than $50 billion market cap. Again, I'm looking for stocks that are going to go 50% to 100% over the next 6 to 12 months. And it's really hard for these big behemoth companies to show you that kind of growth. So I kind of shy away from them for this particular screen. I want management to own at least 2%. They've got to be above their 50-day moving average. It's not an ETF, and so on and so forth. So that's sort of my criteria of what I'm looking for. So what it does is takes this 9,700 and it whittles it down to a list of 21 stocks, which then I can just flick through really quickly. I just have them sorted in alphabetical order. I'll take this off here, and then up comes the chart. So the next thing I'll do is I'll create a new list. So I create a new list called June 25th Watch. And it's blank to begin with. And then simply as I'm scrolling through these charts, if something appears to be of interest, I'll just quickly click on Add to List, and it automatically dumps it in that list. So I just quickly go through this list and see if there's anything that's of interest to me. This one I would add to the list, and so on and so forth. I would add this one to the list. So I'm not really looking at the fundamentals, because I already know that the screen is only looking for companies that are really growing. So example, this one, in the last quarter, its earnings were up 223%. The previous quarter was up 100% over the previous year, 71%. So earnings are increasing exponentially. The revenue is 33% above the prior year 3 months ago, or 9 months ago, up 49%, up 78%. So this company is growing very rapidly, but I know that because I've already screened that out in here, so I don't have to pay much attention to this. So anyway, hopefully you get the idea of that. So then what happens is I open my lists. When I've done all my scanning, I go to various scans and I dump them into this list. I then open up my June 25th watch list, and there are 23 items that I've dumped in here. Now, on a normal weekend, I would have between 50 to 70 to look at. But this weekend, because of time constraints, I just went through a couple of scans and I didn't go in too deeply. So I just have 23 items to look at. So that's my sort of starting place for there. Just slight diversion. If you have an advisor and they're not using this sort of tool to assess fundamentals and the charts and what institutions are owning the stock and not, I would question where they're getting their ideas from. And if they're not generating superhuman performance for you, you might want to either encourage they do this or find somebody else. But that's just an aside. This is a real simple tool, and it's not terribly expensive. I think this cost me about $150 a month. So I mean, it's not cheap, but for anybody with decent amount of investable assets, it's not very expensive. So now I've narrowed this list down to 23 items. So I basically do the same way. Get rid of this. As I do with the Canadian, I just dump these all into what's called a high on deck list. So I've actually gone through this and pulled out of this high on deck list 8 of them that were what I would call focus. And I'll go through these in a little more detail in a minute as to what I plan to do with these this week. But as you can already see, comparing to the what we looked at the Canadian side, there's far more opportunities in the US right now, but that's to be expected. Their market is so much stronger. So we'll get into that in a minute. So back to what I'm looking to add here. I have, as I mentioned in this morning's video, on the US side of things, I'm going to have a model portfolio, basically $100,000. And I want to divide it into 4 positions. So 4 positions at 25% each. And I would be fully invested. I already have 1 position that I opened last week. Just go to that one. This was a construction company. Actually, my other computer just shut down. NOAA, which is, what do they do? They're oil and gas field services company. So this one's sort of bucking the trend. The oil and gas sector is really fairly weak. This one is outperforming, but it's I recognize because of that it's going to have a little tough slugging, but the pattern looks really, really, really good. So I have one slot of my 4 slots already allocated to this stock, and I'll just pay close attention. I entered here, my stop is down here. So if over the next week or 2 I get stopped out, I'll have room for open another position. Or if it screams up, hopefully I'll hold this one for like a long time. So that's that. So let's go back to the S&P. So as we talked about in previous videos, we've come up here quite nicely. We've pulled back now for 5 days. So one strategy, just looking at the market, would be to buy above this high and stop below the low. Now, to take full advantage of that, if that does happen, I would use a double leveraged, or actually probably a triple leveraged S&P ETF. And the triple leveraged is UPRO. So the pattern looks same as the S&P. The difference being, if the S&P goes up 1%, this ETF will go up roughly 3%. But the converse is true. If S&P goes down 1%, this will go down about 3%. And as an example, I don't know how well you can see this on your screens. On Friday, the S&P was down 0.74%. The SSO, which is a double leveraged, went down 1.5%. And this UPRO went down 2.25%. So unless you're very, you know how to play stops, you're willing to play stops, you're not afraid to take a loss. If you're any of those, if you're not any of those, then this is, I would not recommend this at all, because they can move quickly and move deeper than you think. So you have to be extremely diligent on your stop losses. But the flip side is, if the S&P does go up 4% in the next month, this particular instrument is going to go up 12%. So it's really a way of supercharging your index returns. So with that in mind, I'm planning on Monday, if it opens above Friday's high, I'm planning on one full position of this. So that means I only have 2 more slots available, and I would become fully invested by the end of Monday. So that's quite a change from going 100. Well, I'm 75% cash, going to 100% invested in a day or 2. But that's what I do. Okay, so I've taken this high on deck list and I've whittled it down to 3, 6, 8 that I'm going to seriously look at for Monday. So we'll just go through these individually. ALG, Alamo Group, I think that is. Sorry, I haven't got everything on one screen. ALG is another, it's not coming up. Why is that not coming up? Okay, not sure what they do. Good pattern. It keeps bumping up against this $186 level and then gets rejected. So there's obviously some supply up here. This pullback was a little too deep. And now we've pulled up here again and got slightly rejected, but these pullbacks are getting shallower. But I really want to see this tighten up a little bit this week. So this would not be a Monday stock, but if this does something like this on this week and then goes higher, I'm probably going to enter this one. So right now I'm going to move this one just back into this group here. Salesforce, this one's a little big in market cap. I think their market cap's 60 billion or something. It exceeds my normal threshold, but I really like this pattern. Notwithstanding, we do have some overhead supply here in the weekly chart from a couple of years ago. But again, it needs to clear. The entry wouldn't be up till about here somewhere. And a logical stop is down here. And I can't remember the calculation exactly, but it's around 7%. So that's just a little too high for me. So, I mean, it'll stay on my radar screen, but it's just, I want to try and restrict my risk to 5% or less if I can. So I'll move this one down too. DraftKings, I think, is a similar story. Again, I like the pattern. We're coming off. This is what Minerini would call an early turn. It had a big drop from 64 down to, it got 80, lost 70 or 80% of its value. But now seems to be coming back up. Their fundamentals look really good. Sales are increasing rapidly. Earnings are starting to increase. And this is a good pattern on the daily. But again, if I enter up here at 26, my stop is down here at 24. That's $2 on 26. That's about 7 or 8%. Just doesn't meet my threshold. So it needs to tighten up too. And, you know, perhaps we get something like this. And we get a much tighter stop. I should be able to, you know, if we get a stop up here that keep it under 5%, this would be more interesting to me. So this one's a wait and see. FIX, heating air conditioning company. I did own this. I got stopped out at break even. Not break even, I lost $6. Yeah. So I'm going to wait for this one to tighten up a little bit more too. So it's not ready for Monday. FLYW, but they're getting close. Some of these might go in my trading account, but you know what I'm trying to do in this video is more longer term. So you want to be in, have a safe stop, minimizing your risk. So again, this one needs to tighten up a bit more, and entry will be up here around $32. But if we entered there now, you'd have to put a stop down here at 30, so it's $2 on 32. Yeah, that's over 6%. So it's close, but not no cigar yet. So that'll have to wait. FTNT. This is another 50 or $60 billion company, so it's a little on the big side. And you can see it sort of mirrors the S&P 500. So, you know, again, I get more bang for my buck by going into something over UPRO, because if this goes up 2%, you know, if S&P goes up 2% and this goes up 2%, my UPRO is going to go up 6%. So I'd rather have that as the other as an option. So I mean, I may trade this, but not invest in it. Spotify, another big company. But again, this is a really solid pattern, but coming out of, this is one of these beaten down things. You know, Spotify was up here at 300 and some odd dollars, got cut down to 80. But now looks like it wants to make a comeback. So I'd rather it base here for 2 or 3 or 4 more weeks and then use up some supply and then rip through. But we don't always get what we want. But the risk reward here is pretty good. If it gets above 159, your stop is here at 152. So that's $7 divided by 159. You know, we're at a 4% risk. So this one's going to be high on my list for tomorrow. It's maybe taking that last spot. And then the last one, TMDX. I really like the fundamentals of this company, but it's pretty whippy. So getting on board here safely right now, it's going to take a little bit more time. So I'll move that one down too. So hopefully that's not I've got too confusing to people. Obviously, there's a lot more to this, but if you have ideas on things you own and you want me to interpret the chart patterns for you or look at the fundamentals, be glad to do that. But hopefully this will help you. Okay, Sunday night, it's time almost for a glass of wine on the porch, and we'll make another video later next week. Cheers.